Will you have enough money set aside for your retirement? There's lots of different factors that can influence the answer to this question, and in today's video I'm going to share with you a tool that will help you answer this question and better prepare you for your financial freedom. But before we do that, we're going to jump into my portfolio, we're going to look at the performance, we're going to buy some stocks, and we're going to look at the dividends that we've earned since the last video that I posted. My name's Darren. This is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners. Let's face it, there's no magic that makes you ready for the first day that you start investing. And I'm going to do that by sharing my journey and all the ups and downs that I experience along the way. I want to start by acknowledging all of the people that are subscribed to my channel. There's nothing more exhilarating than waking up in the morning and finding out that somebody has taken the time to hit that subscribe button. Since my last video, the community has grown. Our current subscriber count is now up to 339 people. And to some of you, that doesn't seem like a lot because there definitely are a lot of big channels out there and you have lots of choices. But those people have chosen to watch my channel and hopefully take something away from it. So thank you very much. If you're not subscribed, just take a moment, hit that subscribe button. It doesn't take much. Having a loyal audience is important when you're on YouTube. And for that, I want to take the time to acknowledge Vic Gill 1980. Vic has commented on pretty much every one of my videos. And if you don't know, I do take the time to answer some of the comments that are put on there. And as the channel's been growing, I have been getting more and more comments. I actually encourage this because it creates a conversation, and that's the whole purpose why I started the channel, is I want to share my experiences, but also hear from you folks as to what you're doing with your investing. And hopefully through this conversation, we all can learn from each other. So thanks, Vic, for taking the time to comment on the videos and watch the videos. So let's jump right over into my portfolio and start looking at how things are doing. My entire Wealthsimple portfolio is up to $135,024, and it's broken down to 4 separate accounts. So we're going to go through each one of them and have a look at how each of them are doing. The first account's my cash account. That account has $35,436 in it, and that account is an emergency fund and our savings account combined into one. Why, you might ask? The reason is that they offer a 4.5% interest for premium customers. A premium customer is somebody that has over $100,000 invested with Wealthsimple across all of your accounts. So each day they calculate the interest, which is annualized but paid monthly. The next account is our kids' registered education savings plan, or RESP. That one's up to $60,712. And in that account, every payday, so every 2 weeks, we make regular contributions, and we have 2 kids. And the reason that we do that is that we get to take advantage of the government grants. This is a sheltered account, so any growth in it is not taxed. Now, when you go to withdraw that money, it's a little bit different. But that's for a different video, which I did, and you can go track that RESP video down if you want to learn more about that. The third account is my RRSP, and that has $16,446 in it. On the channel, I use 2 different brokers, but the one that I primarily focus on is Wealthsimple. It's a very easy platform to use, and one of the bonuses about using Wealthsimple is they don't have any fees to do your trading. I want to give a special shout out to Renee. Since my last video, Renee used my link for my primary broker, which is Wealthsimple, and I'll put it up here on the screen. It's also down in the video description below. If you use the link, you can start your investing journey, and you'll automatically get $25 in your account, which is one of the great benefits of using Wealthsimple. There's no fees to trade, and you can get started with as little as $1 a day. Thanks, Renee, for using the video link. So jumping over to my tax-free savings account, which is the account that I highlight on my channel, that one's up to $22,290. The one-day performance on that account is down $85. On the week, we're down $95. Over the past month, the account is also down $85. And all-time returns on this account are plus 10%, which equates to about $2,100. Now that has come over the last year. I started investing in April of 2023, so I'm just about coming up on my 1-year anniversary. So that didn't happen overnight, and if we go back and look, we can see that when I initially started investing, my returns were not as significant as they are today, which highlights the fact that you need to keep your money invested in the stock market and not interrupt that compounding. All right, so we're jumping over to passive because I want to show you my asset allocation and where I'm taking my account in the future. And if you don't know what passive is, it's an amazing tool to track all of your securities, all of your dividends, and you're able to set up your asset allocation, which is a critical part to your investing journey. And if you're not too sure how to do that, you can watch this video here. So I think simplicity is the name of the game when it comes to investing, especially as a beginner, and ETFs are a great way to do that. So if you've been following the channel for a bit, I have set an asset allocation for my portfolio, and the idea behind that is so that I can reach those benchmarks each time that I'm investing. So looking here, the top holding in my account is VFV. VFV tracks the S&P 500, and I currently hold 46.4% of my portfolio in that particular ETF or exchange traded fund. And I've set the target allocation for that at 45%. So as of today, we're currently a little overweighted in that, but that can change over time, which is a whole other thing when we talk about rebalancing your portfolio. The next thing that I've introduced into this portfolio is XEF. What's important about your portfolio is you want to diversify your portfolio. So in this case, I set XEF at a 15% allocation, and as of today, that allocation is actually sitting at 7.7%. So we need to build up, and you can see on the screen by virtue of the graph that we do have some room to make up. So each week I will add more funds to that ETF until I get to my target allocation. Then as we move forward towards the end of, say, the year, we'll rebalance that if one of those securities is overweighted. So that means that if one is performing really well, we're going to sell some of that and reinvest it into one of the other securities which is not performing as well as the other, because as time goes on, that particular security will grow in its returns, therefore increasing your overall expected returns. So why do I pick XEF? For a few reasons. Number one is its international diversification. If we look at the Canadian stock market as a whole, individual securities within the Canadian market only account for a very small percentage of the entire stock market, both in North America and around the world. So in order to seek some more broad diversification, I like this ETF. It holds over 1,500 stocks in Europe, Asia, and Australia. And we'll have a quick look at the separate holdings within it. We can see that it is broken down by percentages around the world. The first being 24% of it is the first is 24% in Japan, 14% in the United Kingdom, 11% in France, 8% in Switzerland, 7% in Germany, and so on and so forth. So I'm getting this broad diversification around the world as opposed to focusing just on the Canadian market, which again makes up a very small percentage of the entire stock market around the world. So the second ETF that we're going to invest in today is XIC. What is XIC? Well, by owning this ETF or basket of stocks, you are going to own the entire Canadian stock market. So for instance, let's look at its holdings: the Royal Bank, the Toronto Dominion Bank, Shopify, Canadian Pacific Railway, Canadian Natural Resources, and of course the hot topic, Enbridge. And now if you don't know about Enbridge, I did do a video about it. You can go check it down in my video list. Their top 10 are Canadian National Railway, the Bank of Montreal, Bank of Nova Scotia, and Brookfield Asset Management. But by owning all of these, you're going to get the total returns of the entire Canadian stock market. And remember when I said the Canadian stock market does make up a very small percentage of the entire stock market around the world. So going back to my asset allocation, we can see that I put a larger weight or percentage of my asset allocation to VFV, which is the top 500 companies in the United States. And secondary to that, we've diversified by putting an asset allocation of 15% to XEF, giving us that international broad exposure. And then, like I said, the Canadian market is a smaller part of the entire market. So XIC, which is the entire Canadian market, I've set that allocation at 8%. Now, some might ask why only 8? Well, The reason for that is that if you look at my portfolio, I actually hold XEI, which is a monthly generated income ETF that tracks many of the same stocks that are held in XIC. So if you add both XEI and XIC together, you get 16%. And then if you add my individual Canadian holdings, that brings me up to about 20% of my portfolio is invested into the Canadian market, which I think is a good balance between the North American market, the international markets, and Canada. A big takeaway for me over the last year of investing, and again, I'm a beginner, is time. Time in the market is important because you get that compounding effect, but your time is equally important. Money does not create happiness. What are we doing here? We're planning for your retirement or your future. And we want to be able to set ourselves up so that we have enough money in retirement when we're no longer working in order to pay our day-to-day bills and travel and do all the other things that you want to enjoy in your retirement. And I think that right now investing in ETFs is the more simplistic way so that I can both balance my time with my family and work and not be too stressed about my investing. So like I said, and today we're making things very simple and following our asset allocation, and we're buying those two different ETFs. The first of which is going to be XEF, and we're buying 20 shares of that today. And in addition to that, we're buying 8 shares of XIC. And I'm splitting the two so that I'm still investing in both so that we're building up them both with every 2 weeks. So moving forward, we're going to build up that asset allocation until we meet those targets, and then we'll look at where we're going to go next. And when you're buying stocks, the share prices don't always work out perfectly, but one of the bonuses of Wealthsimple is that you can buy a fractional share. In other words, you can buy a small part of a share instead of buying the whole share and having your cash just sitting around doing nothing. So today I have $10.70 that's left over. So we're going to invest that money into QQC. What is QQC? Well, QQC provides exposure to companies at the forefront of innovation across a diverse range of sectors. The fund invests in 100 of the largest non-financial companies on the NASDAQ exchange. At the beginning of the video, I said that I was going to share with you a tool that will help you prepare for financial freedom. And that tool is part of Enriched Academy's website. Now, full disclosure, my place of work paid for all the employees that I work with to have access to Enriched Academy's website. But this particular calculator that I'm going to show you, I think is very valuable and very important. And I haven't been able to find another one on the internet, so that's why I'm showing you this, just to demonstrate how important it is to do this part of your planning for your financial freedom when you're looking at retirement. So what we're going to do is I'm going to input a bunch of things into this calculator, and then we're going to look what the end result is so you can see what it would be like if you were looking to plan for your retirement. So we're going to make some, this is just a random person, we're going to make some assumptions. This is a 20-year-old person, and we're going to say that their desired age of retirement is 60 years of age. Now this is really important because people don't live, they live a lot longer than they used to. So we're going to make an assumption that this person is going to live to the age of 88. Now we're going to say that their annual contributions are $20,000. Now what's important to remember is when you start investing when you're 20, you're not really going to be able to probably put $20,000 into your accounts. Making some assumptions that later in life you would be doing so. Obviously you would have to adjust this as time goes on. So I'm going to say you're making $20,000 contributions annually. And then the next thing we need to do is we need to put in your annual income. We're going to assume that this person is making $80,000 a year. And we're going to say that they start out their portfolio with $150 with an annual interest rate of 5%. And the inflation rate is going to be at 3%. And we're going to say that this person wants to have $55,000 of annual income in retirement.
And the last part is you want to know how much other money you might be bringing in. I'm going to make an assumption that they weren't bringing any money in. Remember, this is a fictitious person just for the purposes of demonstrating how this tool works. So once you hit next, it takes us over to the screen, which is the most important one, and it tells us all the important analytics about what we need to save. So it's telling us that we need $3,900,000 in retirement based on that $55,000 that we want to be able to draw down on every year in retirement. And it says based on all the numbers we put in, remember we put in 5% compounding interest, which is, I think, pretty average. It could be higher, could be lower in some years, but we're just going to use that. Then we would only have $2,400,000, and that would leave us a shortfall of $1,500,000. And so then you would have to obviously make adjustments as you're bringing more money in so that you're putting more money away for retirement. Again, a really great calculator to prepare you for retirement. Then on the bottom, it's going to show us a graph. So obviously we said we retire at 60, which is the line you see in the middle. That's when we're going to have the most money, and then we're going to start drawing down on that money. And by about the age of 75, if we didn't contribute any more to our account, we would run out of money. So again, really great tool to prepare someone for investing. In fact, I would say this is probably one of the things you should do before you get started investing. On top of the fact that you should pay debts off and so on and so forth. But I think this tool is great. It's going to get you on the right path to decide how much money each year based on your salary you should be putting away so that you're prepared for that financial freedom in retirement. Now, as I said, I'm not getting paid by the Rich Academy to do this. I'm simply sharing it because I think it's really important for everybody. But if somebody else knows of one of these calculators, please leave it in the comments. I could actually go out, find it, do another video on it, and share that as well. This just happens to be the one that I know about. And again, I think it's pretty valuable, so I wanted to share it with you. We're jumped over to the Blossom Pro app, an amazing social media app, totally dedicated to investing. If you're not on it already, I'd highly suggest you go over and check it out. I have the pro version. It does cost some money for the year, but you can get the free version and still take a benefits of all the conversations that take place on there. And I'll just walk you through my portfolio to show you the dividends, which is what I want to highlight. So right now, when you look at this is what you're going to see on your side. If you're looking at my portfolio, it tells you that my all-time returns are 5%, and then it breaks down my portfolio by each stock, shows you the performance of the portfolio, and in this case, it's my TFSA and my RRSP. So you take your brokerage account, you link it to Blossom, and it updates real time. So when you're buying stocks, so if I buy something or I sell something, you're going to see that update on Blossom Pro right away, which is just an amazing feature. From the view that you guys get to see, it's going to show you what my annual yield is as far as my dividends are. It's going to show you which ones are producing what types of dividends. Now, if we jump over into something I wanted to highlight is the learning part, which is fantastic. There is a daily trivia part, so you can go in here and answer the questions that they put on, which is a great way to test your knowledge. They have some courses in here. You can learn from a lot of great people like Brandon Beavis. If you've been around the investing world in Canada, you'll know his name. His dad also has a YouTube website. You should go check them both out. There's also some courses that are put on in here, and you can actually earn a little bit of money while you're at it and put that into your account for your investing. So jumping over to my portfolio, you can see that it gives me the view. So this is what I pay for with the subscription that I have, and I can break it down for the various accounts. But the part that I wanted to show you is my dividends. So right now, my entire portfolio is making $1,597 annually in dividends. By the month, we're making $133. By the day, we're making $4.38, and every hour, I'm making 18 cents. If we drop down a little bit further, we can go month by month, so we can see all the way back to April 2023 when I started, and now all the way forward to the current month of March in 2024. So for this month, I brought in $109 in dividends, and what I like to see is it's kind of like a ladder. You can see that the dividends are slowly paying out more and more as I add more to my account. So we'll jump down and we'll jump right into the month, and we'll go back and see which ones have paid out since the last video. So we have QQQY that paid out, Testy paid out, Plaza Riet paid out, EIT, and Car UN. And like I said, so we're sitting at that $118 to $119 for dividends for this month. And I expect I do have a few more that will pay out at the end of the month. So if you're not on Blossom Pro, I would highly suggest it. It's an amazing platform for people to learn. It was very helpful for me, and it is day to day. You'll find me on there talking with people and getting suggestions and just learning and enjoying the platform for what it is. So in my previous video, I had put a challenge out to see if we could get 50 likes for my video to beat my best performing video. As it turns out, my best performing video now has 60 likes, but we did achieve the 50 likes on my asset allocation video. So big thumbs up to everybody for hitting that like. It's probably one of the most important things, at least for me, because it helps get that message out to other beginners, and that's the whole reason that I started my channel. So thanks for watching this video. If you want to learn more about that asset allocation, the video link is in the description below, and you'll see the photo right here, and you can go off and watch that video and learn about asset allocation and see how it works in my portfolio. Okay guys, we'll see you in the next video.